that outlook. Nikhil Gupta is now joining us. He's India economist at CLSA. Nikhil, good morning. Great to have you with us here. Thank you very much. I think we're speaking for the first time since, in the new avatar, if it's at CLSA. So good to have you on board. And I hope this is the first of many interactions here. Just Nikhil, how are you thinking about you're somebody who's for years, talked about how demand has been a problem, across, and consumption has been a real problem. We've had those around the budget every year, we've had interactions, etc. Will the GST rationalization, in a durable way, lift mass consumption? Actually, forget mass consumption, consumption broadly across sectors. How do you think about this, Nikhil?
Thank you, Prashant. Good morning. Thank you for having me on the show, and it's nice to connect with you always. Okay, so yes, Prashant, broadly, we have always believed that household finances have been really weak in India, which is going to hurt consumption, and we are seeing consumption growth. We are seeing consumer companies struggling to post volume growth. And if you look at what the government is trying to achieve over the past 2025 year, at least, they started the year in the budget. They announced an increase in the income tax exemption limit, a significant increase, which was supposed to give a boost to consumption. Then we saw a decline in interest rates from the RBI, and now Prime Minister Modi has announced that by Diwali, we will see some GST rationalization. So one thing is very clear, that there is an acknowledgement of consumption slowdown, and the government is trying to address it through various ways. The question is, will GST rationalization help to reverse this slowdown in consumption? It's too early to say at this point in time. We do not know the details. If I just go by the headlines, and if I do a rough calculation wherein we assume that 12% and 28% GST slabs are gone and they respectively move into 5% and 18%, then the calculation suggests that the total loss to the government on an annual basis could be in excess of 1.5 lakh crore, 1.5 trillion rupees, which at this point in time seems too high to believe. We know that the direct taxes has not been very strong, especially personal income taxes. We are going to see the impact of the increase in exemption limit. At the same time, we know that the government is very serious about their fiscal deficit number. So we don't think that fiscal deficit number would be something that would be compromised. Even if there is a shortfall in receipts, it is very likely to be adjusted through lower spending rather than adjusting fiscal deficit. So all in all, broadly, as I said, there is clear acknowledgement that consumption slowdown is there, and the government is trying to address it through various ways. But we must understand that this slowdown in private final consumption expenditure or household spending in general has been playing out for almost a decade now.
Yeah. Just one thing, you're just sheer numbers. You're saying 1.5. They can't find. If you go by media reports, it basically a little over 1.5 lakh crores. You're saying that can't be found. That money can't be found elsewhere by doing, increasing something. We don't know how, but you don't think there is any room given the state of finances?
No, I'm saying if this is a gross losses, I'm saying the government cannot afford to have these kind of losses at this point in time, because we are already seeing shortfall in the direct taxes. So it is very likely, if we see these kind of losses to the tune of 1.5 or excess or thereabout, the government will try to make up at least a part of that through some other ways. Now, we don't know what those other ways would be. All we are doing right now is speculating on the statements made by Prime Minister Modi on the Independence Day speech.
And Nikhil, just to clarify, the 1.5 lakh crore rupees of loss that you're talking about, that is total loss, states plus centre, or that is just the centre's component?
That's the combined losses.
Yeah. So, would you sort of bifurcate that and give a sense of the centre's share, and then therefore we have to see how much they're foregoing through direct taxes because of the income tax cut, and then through the indirect tax route? How much would be the centre's hit?
No, again, because we do not have the specifics of this GST rationalization, it is very difficult to put in a number. But broadly speaking, we can say it would be 50-50 between centre and states combined. And we also need to remember that all the decisions related to GST rates are taken by the GST Council. So states also have the equal say if not more, in making changes to GST rates. So,
Nikhil, the other thing is to take your point. So 50-50, roughly speaking, centers hit would be about 75,000 crores and similar for states. The other thing which our colleagues are reporting is that in the new avatar, the compensation cess needs to go. So that little cushion also is not available anymore. So will the set-off really play out? The government's hope is that overall increase in demand will lead to tax buoyancy and they'll make good most of the 75,000 crores. Do you think that could be a realistic scenario?
I would not go by the assumption that whatever the makeup by higher demand would be more than 75,000 crores. That, according to me, would not be my base case at this point in time. But again, I'm repeating again and again, we do not know exact details. We do not know which items would be affected, which segments would be affected, how much price elasticity would be there, what would be the increase in demand. So it's very difficult to answer these questions at this point.
Yeah. Nikhil, just since we are talking in hypotheticals, and maybe we'll have you, would love to have you back on later this week when the GOM, etc. is done. You said they'll have to make up this revenue loss through some measures, right? Since we are talking in hypotheticals, what could those measures be?
I would not go into those kind of speculation at this point in time.
No, but broadly, with what you're thinking and how the government is sort of behaved on other taxation, etc., what could it be? Where would they go? Which areas would they go to make up for this, in your opinion?
Very difficult, because first of all, we need to be very clear that 1.5 lakh crore, what I'm saying, this is a very gross number based on very rough calculations. We do not know exactly what would be the losses, what would be the rationalization look like eventually. And you talked about compensation cess. We know that compensation cess is going to expire in March 2026. Now, again, we do not know if it is going to end in March 26 before that, or if it will be extended, because the decision on that is also pending. So a lot of questions are there. It is very difficult, even speaking hypothetically, to answer your question at this stage.
Okay, all right. Hi, Nikhil. Good to see you, Win. We have discussed a fair bit about the GST cuts. I wanted a couple of numbers. One is with regard to the tariffs that are imposed on India by the United States. What would that be? What impact would it have on our GDP if you could quantify it? Point number one. Point number two is, the RBI has done its share with regard to monetary easing. Do you think we have another rate cut in store in the coming months?
Hi, Nikhil. Good morning. Okay, to answer your first question, our calculation suggests that the tariff impact could be as much as 60 bips of GDP growth, again on an annual basis, which means that if the new tariff of 50% comes into play and remains so from the end of this month, then FY26 growth could be impacted by as much as 35 bips. Now, again, this is the maximum impact that we're talking about. There are, again, a lot of ifs and buts. We need to see what kind of changes do our producers or exporters do in terms of finding new markets, how soon they can find it, how soon will the US consumers be able to adjust with some things where India holds some bargaining power in terms of diamond jewelries, etc. There will definitely be some sectors where we'll be hit, and that's why there is no denying that if these new tariff rates remain in place from this month end, we will have an adverse impact on GDP growth. But the total impact, according to us, would not be more than 60 bips on an annual basis.
And
RBI, yeah.
To answer your second question, RBI, again, we have always held since the June 50 bips rate cut by the RBI. We believe that GDP growth forecasts of the RBI in general are still optimistic at this point in time. There is a high probability that GDP growth, actual GDP growth would be on the downside, and inflation would also be lower than what the forecast, even the new revised forecast, we are saying there is a possibility that headline inflation, because of food and vegetables in prices, would be lower than what the forecasts are. And if that is the case, we believe that there could be a rate cut, very likely in December. We are still not putting October as our base case, because we must remember that the CRR cut that the governor announced in June, kind of pre-announced, have still not taken into place. So they will start from October and they will continue till November end for 2 months. Sorry, they will start from, right? So once that happens, we believe if the next rate cut has to happen, it will happen only in December, the first week of December, when we have the next policy. That is what our base case is right now.
So December rate cut. Got it. Nikhil, just quick last point on GST again, and we hate to tie you guys up in numbers, but like you gave us that number for tariffs. Tariff impact is roughly 35, basis points of GDP. Now, this GST cut, if it materializes in the current form that is being discussed, is there any estimation? Could it boost GDP growth by, I don't know, 30 bips, 40, 50 bips, or maybe credit offtake by any certain measure? Any such formula that you've been able to work out?
Not done right till now. So because see, the impact will be huge. First of all, we need to be very clear about what kind of government losses will be there in terms of the receipts. Then if the government makes some other adjustments in order to make up for those losses, we know if once we know the items which are moved into what, then we would have to have some impact on inflation as well, which definitely would give some boost to consumption. And that is when we'll be able to do some calculations on consumption and GDP growth. At this stage, I'm sorry, I do not have any specific answer to give you on this.
Okay, always cautious and held back with, and that's the way to go, right? I mean, instead of jumping and putting out specific numbers when we don't know. Thank you very much, Nikhil. As I said, hope this is the first of many. Appreciate your time here on CNBC TV18. So that's Nikhil of CLSA with perspective on the GST announcements.